Hi, everyone. This is Jen Appel speaking. I'm a research consultant on the asset allocation team at NEPC. During this topic talk session, we'll be covering reserve currencies. Now, this is a topic we frequently discuss internally, and we wanted to use this platform to provide some insight into how we think about reserve currencies more broadly. So to start, what does it mean to be a reserve currency? Well, a reserve currency is a global currency that a central bank, government, or other entity will hold generally in their reserves. In order to be a reserve currency, typically the currency will have to be commonly used in global transactions. It'll be held in significant quantities by global central banks, and it'll have an outsized impact on global markets. So as you think about these three criteria, it really indicates there's a global willingness to use the currency, whether that's for liquidity, stability, or another reason, and that there's a deep financial system to support it. With that said, there are 8 official reserve currencies recognized by the IMF, but as we'll show in the following slides, the US dollar is by far the dominant reserve currency. So to help put the dollar's status in perspective, one metric that's often used is central bank foreign exchange reserves. Global central banks maintain these reserves in the event of economic shocks to influence their currency value and for settling international payments, among other reasons. Currently, the US dollar makes up about 60% of reserves held by central banks. This number has declined in recent years, but with the last reading showing the US dollar share at a 25-year low, but the dollar is still by far the dominant currency in this space. And as you can see, there are other currencies held by central banks, which are listed here, but those don't really hold the same reserve status as the dollar for various reasons. Another way to look at this is through data from the global trade finance market. This shows that close to 90% of global transactions occur in USD. So to give a quick example, think about two companies operating in different countries, such as Mexico and Germany. Even though they both respectively operate in markets with unique local currencies, almost any transaction occurring between these companies will occur in USD. So that's to say, while not every transaction physically flows through US borders, the vast majority of global transactions flow through US dollars. So with that background in mind, how did the dollar achieve this status? Historically, gold was the dominant basis for global currencies, and after both world wars, the US held the vast majority of the world's gold reserves, and that dynamic held until the early 1970s. Up until that point, the US dollar was convertible to gold, but in 1971, the USD was devalued and the gold peg was removed. But the dollar still preserved its status even after that occurred. So really, this history resulted in a US dollar-centric financial system that continues today. And as a result of this environment, the US has enjoyed what's been termed an exorbitant privilege. That privilege can be distilled down to 3 main benefits. One, the liquidity benefit. As we just walked through, the significant volume of transactions that occur in USD creates continuous demand for the currency, which amplifies the liquidity. 2, from a geopolitical standpoint, the US has a really unique ability to impose financial sanctions. And this can be an extremely powerful tool since effectively the country can influence the ability for an entity to transact in dollars. This has become an important issue for countries such as Russia and China, who have started offloading dollar-denominated assets, which in some sense expresses unease with the current USD-based financial system. And lastly, the US dollar has a safe haven quality associated with it. Typically, during times of market volatility or uncertainty, the dollar rallies, reflecting this perceived safe haven nature. One other thing to mention here from an asset liability perspective is that most global debt is denominated in USD. So to the extent that widespread deleveraging occurs, that creates additional demand for the dollar, reinforcing that safe haven nature. So to wrap up, I'm going to highlight some long-term potential paths for the future of reserve currencies. Full disclosure that we're not trying to forecast if or when the dollar regime changes. We just want to highlight some other potential outcomes that we think are plausible. So first and foremost, there are a lot of reasons to believe that the dollar will remain the global standard, whether that's economic growth, productivity, demographics. There's certainly an outcome where we see the USD market share continuing to dominate. Beyond that, there is the potential for reserves and transactions to migrate toward a market basket of multiple currencies, such as the IMF SDR basket. This type of outcome would likely require more cooperation on a global scale, so more of an integrated kind of multilateral structure than what we have today. Third, it's possible that we could see more regional reserve currencies sprouting up around major trade areas. So contrasting that to the previous outcome, which kind of suggests more globalization, this is more localization based. Then, one which we would view as less likely than some others on this page, that the system's replaced by a single world currency and a global central bank. And finally, and this is not a Bitcoin comment, just to clarify, but we could see some type of digital currency based on blockchain technology. This has come up recently with China's central bank creating its own digital currency, but also the Fed's published papers and launched pilot programs related to a digital dollar as well. So with all of these potential outcomes, we do think that this is an interesting area to monitor over the coming years. And with that, I'll conclude this session of Topic Talks. Thank you so much for listening, and we hope that you'll tune in next quarter.